Welcome to the Contrarian Investor Podcast. We give voice to those who challenge a prevailing sentiment in global financial markets. This podcast is for informational purposes only. Nothing on this podcast should be taken as investment advice. Guests were not compensated for their appearance, nor do they supply payment in order to appear. Individuals on this podcast may hold positions in the securities that are discussed. Listeners are urged to educate themselves and make their own decisions. This podcast episode may have ads and the occasional announcement. To listen without ads or announcements and take advantage of a host of other benefits, consider becoming a premium subscriber. Visit the website contrarian.supercast.tech. That's TECH for more information. Now, here's your host, Mr. Nathaniel E. Baker.
Tony Greer of TG Macro, thank you for joining the Contrarian Investor Podcast today.
Nathaniel, how you doing, man? I'm a big fan. Thanks for having me on.
Thanks so much. Yeah, it's great to have you. Likewise. And we are going to talk about a lot of stuff, but to jump off with, as usual, our guest's most contrarian take on the current state of the markets, which is that you are bullish on commodities. I guess the first question is, which commodities?
That's a good point. You know, I'm friendly to the energy sector and precious and base metals. To be more direct, I think it's fair to say that I don't have a strong view in grains, but I believe that, you know, grains and softs, like many of them have, are going to be along for the bullish ride. So a lot of it has to do with sort of the change in Fed interest rate policy and the dynamic that we just lived through, where we threw out all the commodities like the baby with the bathwater because we had to price in this dramatic global slowdown led by China that spilled over to the United States and very clear weaker economic data. But since June 1st, it was one-way traffic down for commodities. We're in a couple of situations in a few of the energy verticals like heating oil and gasoline, where funds are the least long futures that they've been historically. And there's a fairly sizable short position that's building in crude oil, you know, looking for it to trade down into the low 60s, et cetera. Those positions, I think, are kind of offsides given, you know, how far commodities have fallen. They've shown really, really good resilience at the lows. Base metals have come alive. Precious metals just keep pounding new highs in gold. Silver is kind of along for the ride, in my opinion, but going to do just fine. So with that in mind, and with the idea that nobody's got these positions on right now on the long side, and that I really feel that these could be the place to be for the rest of the year, thinking that all of the economic weakness has been really priced in. We've got a couple of setups where they're vulnerable on the upside, and it's a trade that I'm going to try to stay with because I think that if we see sustained investment in this commodity space as energy comes alive, this uranium trade very much just came alive this week, and that's exciting. And the gold story is kind of nonstop for me, you know, with the death of fiat currency. So it's just kind of I wouldn't say, Nathaniel, that it's like a gigantic fade of the masses, but it is kind of a trade that I think is not very high on people's radar screen, if that's fair to say. And I feel like at the very least, I would rather say that the next $10 in oil is higher rather than lower from $70 last sale.
Do you have a price target?
No, I think that, you know, in terms of the oil trade, I think it's fair to say that we can get back into the low 80s, and that's kind of just back into the, you know, top end of the sort of middle top end of the range. You know, I feel like we're way overdone down here in the downside, and it looks like the market might be able to sustain itself. You know, we're not in a physical glut situation where markets are buried in a steep contango and they're floating storage offshore to take advantage of the, steep contango roll, et cetera, et cetera. So we're not in that kind of a situation at all. It feels to me like the oil price just overreacted to what I'm looking at is a sort of cyclical slowdown in the economy and not a dump into a recession that we're not going to get out of.
Yeah. Yeah. And we just had China announce massive stimulus over the weekend. and the bazooka it is being referred to. Has that helped things, you think?
Well, it vaulted the metals sector, right?
Mm.
Like, the base metals love China stimulus like a fat guy loves Haagen-Dazs, man,
Right.
and so as soon as that headline comes out, copper, there's a Three Sigma rally, there's a breakout in Freeport McMoran, like it's the same script every time. And what's interesting, Nathaniel, is that everybody's instinct is to just fade it, right? And be like, copper's not going up, like this is just on the China stimulus headline. But the reality is that stimulus takes hold. Um, it does create real buying in metals, and then sometimes you get that self-fulfilling prophecy flywheel where if they get the incremental bump better in the economic data, or say we get a bump in economic data, PMI, heats up a little bit, that's when you see follow through in the base metals. And so we're kind of to me, they're a little bit vulnerable technically on the upside. They spent the whole first part of the year basing and trying the upside and then basing again. So I feel like they're technically in good shape. And I feel like copper, at least in base metal complex, is technically in good shape.
You mentioned before the economy. Obviously, you need economic growth to drive commodity prices as well. And you said here that you don't think the risks of the recession are particularly pronounced right now.
Yeah, and I always tell people, Nathaniel, I'm a trader, not an economist.
Okay.
So, take things that I say about the economy with a large grain of salt, right? But I do understand how markets interact with the economy. I do understand how the data flows, and it seems like we've had the city economic surprises index cratered while we were getting all this bad data, which was a sign that the economic data was missing expectations consecutively and consistently, and building a much darker economic picture. So as we kind of filtered through that, you get to the point where commodities reach this dry heave level, right? Base metals pull back into moving average support and they just don't trade any lower. And energy dips into the oil dips into the low 70s, and it trades into the 60s, and it's right back. And it's dry heaves. It doesn't go in, there's no follow through into the 60s. Gold had an outside reversal day down on the day the FOMC actually implemented the rate cut. And then that outside reversal day was negated 2 days later, right? So that's a raging bull market to me. Like, there may have been some trend followers that try to pile in and say, okay, that was the top of this gold move. The rate cut is on the tape. That's it for gold. And, gold looks around the markets and sees other headlines like, U.S. interest on our debt expense is like $1.2 trillion, the largest number that it's ever been before. And the gold market goes, got it. We are financing burning fiat currency with more burning fiat currency. Let's go, And so I kind of feel like that's the gold flywheel that's in motion right now, along with several other factors, that are bullish gold. We've got central bank buying. We've got Saudi Arabia, which just found out bought a huge chunk of gold on the down low, which kind of opens your mind to maybe there are other people trying to buy a lot of gold on the down low, and maybe that's why price action is as positive and striking as it is. So, these are the trades that I'm trying to stay in, right? Mm-hmm. And they're the trades that the market is sort of telegraphing, and I feel like we're very much going with the flow now, with a long bias in commodities, if that's fair.
Yeah, totally. So what other instruments do you trade? You mentioned you got heating oil, gasoline. What other base metals are you doing here?
Yeah, I try to stay in my equity lane, quite honestly.
Okay.
Nathaniel. Yeah, I keep it pretty simple. But now I am long commodities, and I am long in the form of, I basically have been directing my clients to buy, to be long the BCOM or some of the proxies that there are out there. There's DJP, there's DBC, there's a few other names that you can trade that are kind of commodity complex. I like to trade individual sectors fairly aggressively. I'm long the energy sector right now. I'm long uranium. I've been long uranium for a while, and I'm trying to keep that on the books. That's in a separate account from the view matrix from my navigator that I write about. But that's a trade that I'm in personally, and I get excited about the 3 Mile Island reopening with Microsoft news. That's probably the first inning of nuclear powered AI phase rather than a middle inning headline. And so that's exciting and something that you can kind of sink your teeth into. And so there's a variety of ways to play the energy bounce. You can try to track this Freeport and McMoran as one of the copper trades to follow. You can buy XME, industrial miners, GDX, gold miners. There's a lot of ways to skin a cat in the commodity space right now.
But your preferred way is through ETFs.
Yeah, I like trading ETFs just because they keep it simple for me. I know that I trade ETFs and futures, ETFs in stocks, futures if I'm trading just single individual commodities.
Mm-hmm.
And it's just a pure play on the risk, and that's it.
Yeah, walk me through the bull case for uranium. I know it's tied to nuclear.
Yeah, so we've been in a situation where I won't say that there have been shortages, but we got into a situation where the uranium market was extremely tight. It traded up over $100 an ounce. There was definitely a full bull run sort of consensus long uranium trade that set in, and as we say, all the assholes piled into the trade, and it was probably that was the sign of the top, and we just had a big pullback. Kind of waiting for the next headline, which we thought was going to be just a sort of expansion into nuclear to maybe offset some of the weakness that we're getting from some of the sustainable energy, the intermittent powers and all that it's cracked up to be. And it turned out that it was a head-on collision with the AI craze. Right. And we need all the power for that. And maybe that's a little bit of the reason why utilities have been so strong this year. So that's a major storyline that's filtering its way through the market. And what happened this week was the headline came out that 3 Mile Island is about to be reopened to produce nuclear energy again. That is going to be basically used directly by Microsoft for their AI computing efforts. Right. And so if you were around long enough to live through the 3 Mile Island disaster in 1979 and all of the ecological fallout and the sort of social risk fallout and the science risk of it all, health risk of the nuclear waste and things like that, that campaign kind of rolled around the country instantly. And it was like, oh my God, get nuclear shit away from me, like no matter what. And so now this headline is like bringing it right back into the mainstream, right? And if big tech and big banks are going to throw their support behind the uranium market now, you can bet that it's going to be a hot button investment item for the next several years.
Mm-hmm. Yeah, so and the whole no nukes thing was a big political issue back in the 80s.
Remember how powerful that was?
Yeah. Those of us old enough to remember.
Exactly.
But you don't see that coming back. It does seem that the people have other things to be.
You know why? Because if big tech and big banks can profit from it, you can be sure that there's not going to be a goddamn word in the media about no nukes. Right? That was the stuff that when you and I were kids and they were telling us in classrooms, like, this stuff is really dangerous. You know what I mean? If you're anywhere near it after a nuclear accident, the nuclear waste can really, really damage you and damage your DNA and deform you. And you're like, oh my God, we can't use it. It's too risky. Yeah. And then over the years, we've had people prove time and time again how little risk there is associated with it, and actually how completely, I guess, reversible a nuclear spill is. Like nuclear waste can be cleaned up in 2024 and cleaned up quite efficiently and safely. And so, that's the kind of side of the story that doesn't really make its way to the front page when, you're on that no nukes campaign. But like I said, if big banks and big tech are all going to make a lot of money from this, the media is not going to be saying a word about the dangers of nuclear energy this time around. That's for sure.
Probably not.
Probably not. If this year has been any guideline on how the media is going to behave, it's going to be to make sure that business stays in business.
Yeah, they've moved on.
Sick of me yet? Become a premium subscriber and avoid all ads or interruptions. Other benefits as well. Visit contrarian.supercast.tech for more information.
It sounds like you're a believer here in the AI story.
I don't want to fade it. I use Chat GPT on the reg, and I use AI image generators, and I'm kind of a Luddite. So if I'm benefiting from this stuff, I would imagine that the uses are ubiquitous. I also we have a Slack channel of a subset of my subscriber base where we talk about things all so like we talk about 7 or 8 different market verticals in their own channel. And we just had to open an AI channel because the conversation got so intense in some of the other channels that, we were talking about AI in the stock trading channel, and then we're talking about AI in the commodity channel, and then we're talking about AI in the general channel. And so we had to give it its own channel because it's kind of, it's seeping into various different areas of the world, obviously. Right. And I think one of the coolest things that's gone on is basically just seeing how, the practical uses of it. Right. And we've got a guy that's really into AI in our Slack channel and kind of guides the AI conversation. And, he does it by crowdsourcing and like hearing like what people are interested in, and we had a conversation the other day about in technology, when you get into like a query or you have a question, you need tech support. The old tech support was, they put you into this quagmire of a maze of, hit the next button and get to the next level, and your question never gets answered. And now with, the dawn of AI, companies are trying to automate that process. So you can ask, the AI bot tech support a question and it can actually give you some help, and so maybe that darkness of like not being able to get any tech help in the technology space is going to go away, and AI is going to be right there to help you. And that's like, wow, Mike, like, when you think about what that can do for people and, just enhancing computer use, it's kind of mind boggling. Right. So I don't want to talk about AI. I'm not an expert on it, but
yeah. And that it does work. The customer service chatbots. I mean, for sometimes they drive you crazy, but not as much as they used to.
Exactly.
And not as much as the old phone loops used to.
Right.
And by the way, kind of still do actually. But
yeah,
anyway.
no, those are I think those are made to be kind of dead ends for the customer, quite honestly, where the big heads of the tech companies were like, just figure out how to get rid of them. Okay. Make them push 1 and then 9 and then 5, and they'll get tired of not talking to anybody. They'll go away and they won't worry about the problems that we have with our software anymore.
Yeah. So. Because again, it's a personnel cost, right? But if you have computers doing it, then there's server cost, but it's not like hiring somebody.
Then it's an electricity cost.
Yeah, exactly. Yeah.
Right. It just gets boiled down to that.
Right. Interesting. You mentioned something about fiat currency and that whole thing. And that kind of, anytime you hear that, kind of begs a question about cryptos and where you stand on that.
Yeah, it's, I have to be a sort of, I don't want to be a Luddite, and I don't want to be the old man shouting at clouds. So I try to embrace crypto because the world is. And it certainly has shown its resiliency in the ability to come back from, it's very volatile, but it's had the ability to come back from the dead kind of twice in my lifetime so far. And as a trader, that's something that you really respect, and so that's Bitcoin saying that it's not going away. How the future goes, obviously remains to be seen, but in terms of buying into the use of Bitcoin, to me, is not necessarily being bullish the price, if that's fair. I can sit here and kind of be bullish the use of Bitcoin and think that at some point I'll probably be paying for more things with Bitcoin on my phone and maybe engaging in a few more Bitcoin habits. But that doesn't mean that the price has to go to 100K per Bitcoin, to me, in my opinion. I don't think, anyway. And it's still, I'm getting to know it on the macro landscape. I don't... as a trader that's been staring at the same screens for 30 years, this is a new animal that just walked into the jungle. And I'm not really sure what it responds to or what it feeds on or what it wants to kill, and so I'm kind of learning all that behavior now. And I still dream that there's a day that I knock the shit out of a Bitcoin trade, you know what I mean? And I probably will eventually, but it hasn't lined up for me just yet. So it's just something that I have on my radar screen and want to keep on it for sure.
Yeah. And it's certainly been unpredictable. And like you said, it's come back from the dead a couple of times at least. Speaking of which, Caroline Allison was sentenced yesterday, somewhat surprisingly, but let's not get off topic.
But it's fun to root for a currency without a central bank, right? Like that's kind of like the pure play about it. So
yeah, but then you're rooting for all the Bitcoin bros, and they're really annoying. So
they are so fucking annoying. It's unbelievable still. But
I know. Well, they got a new lease on life.
Yeah, exactly. That's true. It's true.
Cool. Tony Greer of TG Macro. I want to take a quick break and then come back and ask you about your background, how you got into investing, what you're doing now with the Morning Navigator newsletter, and also get listener questions. We've got some. So stay tuned. Don't go anywhere. Don't touch the dial. If you are a premium subscriber, you will not get the break, and we'll be right back. In fact, we already are. Everybody else, to become a premium subscriber, visit the website contrarianpod.substack.com and sign up.
We hope you're enjoying this episode of the Contrarian Investor Podcast, where we give voice to those who challenge a prevailing narrative in global financial markets. Consider becoming a premium subscriber. For $9 a month or less, premium subscribers receive a number of benefits. Podcasts are posted immediately after they're recorded. Transcripts are made available within 24 hours. Premium subscribers get direct access to the host, and of course, there are no ads or interruptions. Visit contrarian.supercast.tech for more information.
By the way, you don't need the .tech suffix to get to that website. .com will do the trick. And we also have a Substack that where you can sign up for the same prices, same benefits, same details, contrarianpod.substack.com. So if you already have a Substack account and use it, or have the app and use that, that's probably the best way to go. So contrarian.supercast.com or contrarianpod.substack.com. Whole bunch of benefits, including, of course, getting this episode up to a week early without ads or annoying announcements. And you also get the daily Contrarian briefing and podcast that is released every market day morning at 7 a.m. This is a contrarian take on the events of the day ahead and what is likely to move markets, such as economic data releases, earnings, and other things. It is really good, and that is completely unbiased, of course. So check that out, contrarianpod.substack.com or contrarian.supercast.tech. Now on with the show. Welcome back, everybody. Here with Tony Greer. Tony, this is the segment of the show where we ask our guests to tell us more about themselves and how they got to this station in their investing career, but more importantly, their origin story, how they got into investing in the first place. So take us back and tell me about that.
Man, I'll try to be pretty brief because that story takes me way, way back, Nathaniel. You know, bids and offers were something that were dinner table conversation for me. My dad was an over-the-counter stock trader for Dean Witter Reynolds for over 30 years. And so that sort of got my interest peaked in trading, you know, figuring out how competitive that business was and how much energy my dad had for it was really exciting. So fast forward to getting out of college and saying that I, you know, kind of held my own hand and heart to the fire, saying that I'm going to get a job on a trading desk somewhere and start getting exposure to moving markets and figure it out from there. And I started out, you know, I don't want to go through every, certainly don't want to go through every job that I had, but I kind of cut my career before I launched my own business in half. The first half I spent as a currency and commodity trader for Sumitomo Bank, UBS, and then the bulk of it with Goldman Sachs, which is really where I learned everything that I know about the rigor and responsibility of trading that I employ in my world today. After Goldman Sachs went public, I took a chance to go out on my own. I segued into equity sales, where I spent about 10 years battling against, you know, electronic execution and being able to, you know, really have a really fun and lucrative career in equity sales, until, you know, battling the electronics and margin compression and things like that got really difficult. And while that battle was getting really, really difficult, the thing that was growing was the newsletter that I was writing about markets every day. And from the position of being a sales trader at an investment bank, my note organically grew to an audience of over 1,000 people that were getting my comments on the market that had just been word of mouth, like I said. And so that audience was big enough, and my support from my mentors was strong enough to say, look, you can go out on your own, man. You don't have to work for these banks and, look for commission dollars. You can write about markets and charge people a fee and they'll pay. And so, knock on wood, 6 years later, I launched the Navigator and my own business on the eve of election day 2016. And I said that Donald Trump is about to win tomorrow's election and it is going to turn the world on its head and it's going to go batshit crazy and markets are going to go batshit crazy. And I'm going to be here to write about him every day. And I kind of got what I wished for. And so 7 volumes of the Morning Navigator later, we're still in business, writing to, nearly 1,000 professionals every day and having a great time doing it.
That's awesome. And do you, how do you send this out? It's not on Substack.
I send it out. No, I send it out from a platform called Active Campaign to my clients. So they get a link 3 days a week when I publish, Monday, Wednesday, and Friday, usually.
Nice. And the website is tgmacro.com.
That's correct. There are samples of the newsletter on there. And, obviously the price menu is everything that you would need to buy it is there.
Very, very cool. All right. That's awesome. So let's move on to the next segment of the show, which is the listener questions. And these have come through on the social media. And by the way, if your question gets read on the air, you win a contrarian mug. Nice. And our good friend here, George, Geo_Fed on Twitter, he asks about metals and energy, and we already spoke about that. But what he's asking is for possible inflection events. Like what could turn things, I guess, from being bearish, and they are still kind of bearish, at least the trader positioning, to being more bullish?
Well, first we got to go through the phase of getting out the shorts, right? The people that have been sitting here expecting a recession, they're all short copper still, they're all short crude oil and gasoline and probably nat gas still, waiting for everybody to put the brakes on, their economic activity. There'll be a phase where we're going to go through a period of that short covering, which I think that we're in the early innings of. Then you'll see, the actual performance kick in from the tailwinds of lower interest rates, because it looks like that's still the direction we're going. A weaker dollar providing tailwinds for hard assets and commodities, and then the trends themselves will probably attract CTA buying, where they'll have to flip their positions from short expecting a recession to long because now the commodity is performing based on US easing interest rates and China's providing stimulus. So that's kind of, I can't predict markets. I'm much better at reacting to them. And, it does still feel like the setup is, we've got to unwind those shorts into, putting up a couple of good weeks into months of performance before we attract new capital. But it feels very much like the market is in position to do that.
Mm-hmm. Yeah. I mean, speaking of catalysts, the one event you spoke of, the event in 2016, we're about 5 weeks out of the next presidential election, as you may know, and both candidates seem to be head to head pretty much. What happens if say Kamala Harris gets elected, and couldn't that hurt the whole crude trade? And conversely, if Trump gets elected, and what happens then? Fracking and oil and stuff.
Well, I'm a believer that the polls, for starters, being even is a psyop, right? That's hocus pocus, right? You can't tell me that Donald Trump, who's going around the country getting shot at and showing up with 4x the amount of people that fit in a venue outside the venue, you can't tell me that Kamala Harris is as popular as that, right? So I'm not going to believe that at all. It feels like they're trying to keep her as close in the polls so that if she miraculously wins, that the establishment can say, look at this, our candidate did great. Right. So I feel like there's a lot of hocus pocus there, right? She spoke about ending fracking, right? She spoke about, all of these confines on fossil fuel industry. So what we're going to see if she gets elected is several more years of the oil industry executives putting their hands in their pockets and not spending another incremental dollar on investment spending, right? And expanding their operations at all, right? They will sit out and wait until the next administration, if we're able to get one after that, if Kamala gets elected. But I think that her general platform is so broadly communist on its face, talking about capital gain, unrealized capital gains taxes, and God, what she's capable of doing to the markets is just extraordinarily destructive. So in my opinion, if it becomes clear that she's going to get elected, I think both energy and the S&P suffer massive haircuts, like 30% at a minimum for the S&P. Like it might get cut by even more than that. So, I really think that the market will really, really suffer. We got the whole politically posturing story out of Goldman Sachs that the economy is going to do better under Kamala Harris's policies. And you're like, what are you talking about? Right? She's the most economically restrictive candidate we've had in the history of our nation, right? Running on broad censorship and, really, really authoritarian policies. So to me, that's bad news. If Trump gets elected, it's a different story, right? The last time he got elected, the stock market went up 1,000 points in the S&P, basically in a straight line from the election day sell-off. I think what happens is originally, because he's a drill baby drill president for sure, is that the price of oil sells off. Maybe we do get more sustained prices in the 60s. Maybe it goes even lower than that because there should be, the price of gas is going to get cheaper. We'll be drilling like crazy. We might go up to 14, 15 million barrels a day under Trump. So that could be negative, the price of the commodity. But I think that the E&P companies and oil services companies and refiners are set up so well in terms of having healthy balance sheets again and having not spend a lot of money during the Biden administration that they will go full guns blazing in terms of investment spending during a Trump administration, and their earnings per share will really, really shine, and those companies will do great.
Interesting.
So,
wow, you touched on a bunch of stuff there. I mean, it sounds like if maybe the market is underpricing the possibility of Kamala Harris getting elected, if they're being as sanguine as they are and moving higher to fresh all-time highs, or they don't think that she's going to get elected.
Yeah, they could. Yeah, exactly. It could be one or the other. It's a tough call.
Yeah. I guess the third possibility is she gets elected, but the Congress stays Republican and she can't get anything through.
Maybe.
So, yeah. I mean, even Obama was not able to get everything through with a Democrat Congress back then.
True.
So anyway, that's interesting though. Okay. But it does sound like you are maybe potentially setting up. Maybe that's next month's story. Setting up for
that. We're getting there. We're getting there. Exactly.
Mm-hmm. Very cool. Awesome. Tony Greer, thank you so much for joining the Contrarian Investor podcast today. Great to have you. I hope to welcome you back again soon. In the interim, maybe, or finally, you could tell our listeners how they can find out more about you. I mentioned the website, tgmacro.com. And I see you're also on social media, but yeah, tell us, and I'll put all that information in the show notes as well.
Yeah, absolutely, man. You can follow me on Twitter at TG Macro. You can follow me on Substack at tgmacro.substack.com. That's where I publish, there and Twitter and YouTube is where I publish the Macro Dirt podcast that I partnered with Jared Dillian with. That's
another former guest.
Knock on wood, good reviews so far. And so that's where you can follow me. We publish that once a week and everything else is on the website.
Awesome. Very good. All right. Well, thanks to Tony. Thanks to you all for listening. And with that, we will shut it down and we'll be back again next week or the week after. Speak then. Bye.
Thanks for having me, Nathaniel.
Thanks for coming on.
Thank you for listening to the Contrarian Investor Podcast. We hope you enjoyed this episode. To subscribe to this podcast, simply open your favorite podcast software and search for Contrarian Investor. Follow us on social media by searching for Contrarian Investor on Twitter and Instagram. Send us your thoughts on feedback@contrarianpod.com. We look forward to speaking to you again next time.